Hey everyone, welcome back to Corporate Decoder, the place where we untangle the corporate world. Today we're diving into a Schedule 14A filing from RAPT Therapeutics. Trust me, it's way more exciting than it sounds, especially if you like roller coasters of reverse stock splits and compensation votes. This document is essentially a playbook for their upcoming annual meeting, telling stockholders what's on the agenda and how to vote. Think of it as your guide to steering the RAPT ship. The main event is scheduled for May 29, 2025. Stockholders will vote on some key decisions like electing a director, picking an accounting firm, and importantly, the details of executive pay. One of the major proposals is a reverse stock split. It sounds complicated, but it's very simple. The company wants the option to combine every 8 shares you own into one share, aiming to boost the stock price. Why do this? RAPT hopes a higher stock price will make their shares more attractive to investors, help them maintain their Nasdaq listing, and maybe even make it easier to attract and keep employees. But there's no guarantee it will work. The stock price might not go up as much as they expect or at all, and it could even make the stock less liquid, meaning harder to buy and sell for. Basically, they want to perform a stock market trick that might either make the company seem more attractive or might end up making it worse, depending on how people see it. Speaking of finances, let's take a quick look at the fees paid to their accounting firm Ernst & Young. For the year 2024, audit fees totaled over $22 million, a bit more than 2023's $1.2 million. Basically, you are paying your auditors to make sure everything's on the level. Another vote involves executive compensation. This is non-binding, meaning the company doesn't have to follow the stockholders' advice. However, the vote does send a message on whether the executive pay is in line with shareholder interests in the company paying its executive officers correctly, or do they have diamond-studded yachts we don't know about. Then stockholders get to weigh in on how often they want to have this say-on-pay vote. The board suggests once a year. There's also a vote on approving the 2025 Equity Incentive Plan. This is about setting aside shares for future stock options and awards to employees, consultants, and directors. The important number, a whopping 35,273,658 shares of common stock that may be issued under the 2025 plan. The plan also includes an evergreen provision, meaning the number of shares automatically increases each year for 5 years. Why so many shares? RAPT argues that they need these shares to attract, retain, and motivate talented employees, especially now that they're shifting their strategy. It is the basic, we need to pay our people, but does that mean there aren't better ways? Shareholders may not be very happy about this if they feel that their wealth is being diluted too much. Finally, stockholders will vote to approve changes to the Employee Stock Purchase Plan, or ESPP. This includes removing the evergreen provision and adding 4,000 shares of common stock for issuance. Each participating employee can purchase up to 10,000 shares in any given offering, or $25,000 value each calendar year. Who owns the most of RAPT? Let's quickly check the ownership breakdown. Medici IVLP owns a pretty impressive 16.93% of the total company. Then we have Red Mile Group and Deep Track Capital following closely behind, both holding nearly 10%. It's important to know who the major players are, as their decisions can significantly influence the company. As for the executives and board members, the president and CEO, Dr. Wong, owns 1.27% of the company. Nothing crazy. Let's take a brief look at the director compensation for 2024. Most of them received around $190K to $200K, with director William Riflin, now ex-director, receiving almost $230K. Most of the director compensation came in form of options award, synced $113K, and the rest came from the fees. The pay versus performance section tries to show a connection between how the company does and how much the top people get paid, but the report is honestly confusing to look at. In 2024, the Principal Executive Officer, or PECO, which is Dr. Brian Wong, got almost $7 million. It seems he didn't make as much in 2024 compared to 2023. For the other high-ranking people, or non-PEO NEOs, they averaged about $2.5 million on paper summary compensation. But in actuality, it was almost 604,000, yikes. Looks like it's their stock options and awards are taking a hammering to the tune of almost $1.5 million. On the other hand, net losses look high in either case. It's important to remember is that the compensation actually paid is not how much money the executive took home, but rather a very specific accounting of how the value of their compensation changed based on the company's performance. That covers the highlights of RAPT Therapeutics Schedule 14A. While these filings can be a bit dry, they are useful to understand what is important to companies and to understand their decisions. Now let's step back and put this all together. RAPT Therapeutics finds itself at a really big decision point. The reverse stock split is high risk, and the proposed compensation plans come off a little tone deaf in the current business context. On the flip side, RAPT is addressing issues and working to secure its future, and it has great shareholders backing it. Ultimately, whether RAPT can turn things around depends on the company securing a clear strategic vision and turning new opportunities into revenue. It has a lot of risks, but can also bring a great rewards if the company plays its cards right. Thanks for watching. Do you think a reverse split can be a good idea? Let me know your thoughts in the comments. Don't forget to like, subscribe, and hit that notification bell so you never miss a corporate decoder. See you in the next one.